On January 4th, 1990, the Nikkei 225 plunged 202 points, a tremor that would erase $10 trillion in wealth over the next decade. But this wasn't just a market correction. It was the beginning of a financial mystery, a slow-motion collapse that defied every rescue attempt. While millions lost their life savings, a select few quietly amassed fortunes. Who were they, and how did they pull it off? Rewind to 1985. The Plaza Accord sent the yen soaring, and Japan's central bank slashed interest rates to 2.5% to cushion exporters. Cheap money flooded the economy. Banks lent recklessly, often against inflated real estate. By 1989, the Imperial Palace grounds were rumored to be worth more than all of California. Stock prices tripled in 4 years. It was a bubble built on a dangerous illusion that land prices never fall. The Bank of Japan finally acted. In late 1989, it hiked rates 3 times, popping the bubble. The Nikkei lost half its value in 9 months. But the real disaster was hidden. Banks were sitting on $1 trillion in bad loans, many to shell companies with no real assets. As collateral values collapsed, a credit crunch seized the economy. The mystery deepens. Who was behind those shell companies? Japan's banks didn't collapse. They became zombies. The government allowed them to pretend bad loans were still good, a practice called evergreening. They kept lending to deadbeat borrowers to avoid recognizing losses. This strangled new businesses and prolonged the agony. But while the banks limped along, a shadowy network of non-bank lenders stepped in. They charged desperate firms 20% interest and thrived. Enter the Shoko loan companies. Names like Nichii and Shoko Fund flew under the radar. They weren't banks, so they escaped the cleanup. They lent to small businesses at predatory rates, often seizing assets when borrowers defaulted. Their profits soared as the recession deepened. By 1995, Nichii's stock had risen 800% while the Nikkei languished. The mystery's first clue: the crisis had winners. For the average salaryman, the lost decade was a slow bleed. Lifetime employment evaporated. By 2001, unemployment hit a record 5.5%, low by U.S. standards, but a shock in Japan. Suicides rose to over 30,000 a year. Yet executives at Shoko lenders awarded themselves huge bonuses. One CEO, Kenshin Oshima, became a billionaire while his borrowers lost everything. The betrayal was stark. But the biggest winners weren't in Tokyo. They were in New York and London. With Japanese rates near zero, global hedge funds borrowed yen for almost nothing and invested in high-yield U.S. bonds. This carry trade generated billions in profit. Funds like Tiger Management and Quantum Fund exploited Japan's misery. The mystery unravels. The collapse was a gift to Wall Street. In 1998, the government made an impossible promise. It would bail out the banks without reforming them. It injected $500 billion in public funds, but didn't force banks to write off bad loans. The result? A lost decade became 2. By 2002, the Nikkei hit 8,500, down 78% from its peak. The bailout saved the bankers, not the economy. The lesson: moral hazard is a ticking bomb. Land prices fell for 15 straight years. In 1991, a square foot in Tokyo's Ginza district cost $100,000. By 2005, it was $10,000. Homeowners were trapped in negative equity, owing more than their homes were worth. But vulture funds swooped in. Goldman Sachs bought distressed golf courses and office towers for pennies on the dollar. They made a killing when prices eventually stabilized. Here's a lesser-known fact. Japan's working-age population peaked in 1995, exactly when the crisis deepened. Fewer workers meant less demand, lower growth, and a shrinking tax base. The government's debt ballooned to 200% of GDP. Yet life insurers quietly profited by selling annuities to an aging population. The demographic shift was a hidden engine of inequality. By 2005, the economy finally stirred. Exports to China and the U.S. fueled a fragile recovery. Banks were forced to clean up their books under Prime Minister Koizumi. But the damage was done. Japan's GDP per capita fell from 3rd in the world to 20th. The mystery's answer. The beneficiaries were a mix of predatory lenders, global hedge funds, and vulture investors, all shielded by policy failures. The lost decade isn't just history. It's a blueprint for what happens when debt is hidden and bailouts reward recklessness. Today, with global debt at $300 trillion, the same patterns lurk. The takeaway: in every crisis, there are always winners. The question is whether you'll be one of them, or the one paying the price. What would you have done? Tell us in the comments. Subscribe to Ledger Noir and uncover the stories money tried to hide.